What's going on, everyone? My name is Jeff. So we have come into a time where I think it is very important to start considering the possibility of a recession. And I know this is news nobody really wants to hear. I'm having a hard time accepting it myself, but I do think the grim reality of this situation is almost unavoidable at this point, guys. And so real quick, I had a bunch of people ask about videos how to prepare for a recession. And guys, I'm gonna start uploading 1, 2, maybe even 3 videos a week on how to get yourself prepared for a recession. There's really a whole lot that goes into it. And of course, I've come through the 2008 recession, and at that time, guys, I was still very new to the stock market, and I mostly traded ETFs and index funds and very low risk stocks, and also managed a company 401k that I had. And oddly enough, that actually made it quite a bit easier to deal with back then. But we're gonna get into all kinds of details. I have several videos to come, but I do have a playlist already built for recession preparation right here on my channel, guys. Just go down here and click on playlists. And right here, guys, as you can see, this playlist is called Recession Preparation. That is where I'm going to put all these videos. And of course, they will upload to the regular channel. But if you're wanting to keep an extra close eye, I already do have some material in there already. So there's quite a few things going on right now that you could make the case that we are still in a bull market. Guys, I want to believe that too, and we will get more into that in just a moment. But it is time to seriously observe this mess of a bond market. The US 3-month Treasury bond is actually yielding higher than the US 10-year. And so that just tells you how completely out of whack the bond market is right now. And so I'm not making these videos to scare anybody. I'm not making these videos to get anybody upset and get anybody worried. But I do want to point out that the mainstream media and most all financial channels, stock market channels, they're encouraging people just to ignore the yield curve and simply keep buying stocks, and that consumer spending is strong and the jobs reports are good and the economy overall is very strong. And guys, I think that is actually the time our awareness should be the highest. Even in the video I made the other night, I spoke about that I don't think a recession is coming anytime soon. But now, as I'm observing this and I'm seeing how big of a mess that the bond market is, I know that really ups the risk for a recession to come. I would say in the next year, maybe 2 years. That's the real hard part. Nobody knows exactly when it's going to happen. I think that the stock market will take its cues off the bond market. For example, I've heard a lot of theories that you will see a massive sell-off in the bond market, which will trigger a massive sell-off in the stock market, and that could be the start of the recession. And it's not necessarily that we're going to have a recession. We might just have another big correction. We might not see like a 2008 style recession where we lost 50% on all of the indexes. But I do want to make you aware the bond market is a mess. It's not getting straightened out. And the longer this goes on, guys, the higher our odds of having a recession become. So I think one thing we all need to do, guys, is kind of revisit history. I just want to be clear about this. I do think that the probability of us experiencing a recession or a strong correction are pretty high at this point. The odds are pretty high that we're going to see some big sell-off in the markets pretty soon. But I think it is important that we revisit, the 2007 to 2009 time period, and we can kind of observe just what exactly happened. So I have the S&P 500 index pulled up, and I'm going to zoom in to the highs of 2007 and the absolute lows of 2008. And right there where I've got my marker, guys, is pretty much the start of the economic collapse. And that is the 31st of October in 2007. Now, leading up to this time, all the Wall Street gurus and professionals was pretty much making the same claims that they are now. To ignore the inverted yield curve and keep buying stocks, and that the economy is going to be okay. And really, guys, just to overall keep the level of confidence up, in Wall Street. And I also think too, guys, that's not necessarily bad news. You can still be investing right now. And just like you could still be investing back here when the S&P 500 was at 1,500 points, okay? Because since that time, the S&P has almost doubled, the same as the Dow Jones and the NASDAQ index. Because one thing I don't think any of these financial channels or your Jim Cramers and Warren Buffetts and, CNBC and Bloomberg any of these big mainstream channels, I don't think they're ever going to tell you a recession is coming. And at the same time, investing now is not necessarily bad advice because the markets always will recover and go much higher. But in October of 2007, the S&P was trading around 1,550 points. And then the indexes just started to see a small correction, and obviously the markets were not recovering at the same pace that we're used to. So that is really what we have gotten used to over the past 10 years. The markets correct a little bit and they immediately recover, and we're back to making all-time highs almost immediately. Well, that wasn't the case back then. But for something that started on the 31st of October, it really did not end or find a bottom till February of 2009. So just think about that. You know, a bottom might not set in for up to a year and a half. It might take a year and a half of gains slowly being trimmed off the market until you find that really big drop. The markets find a bottom, and then we start to recover and go in the right direction. And of course, you're going to want to have more cash then than you do now. And guys, keep in mind, you're never ever going to hit the bottom right on, okay? Every time you think it's at its lowest point, it's probably going to get a little lower. And all of these Wall Street gurus are going to do everything in their power to keep this market propped up. And the bull inside of me really wants to see that happen. Guys, there's also a chance we don't get a recession. But I think there's too much data pointing to the fact that there is one soon to come, and we do need to start preparing ourselves. So at the lows here in February of 2009, the S&P 500 did not recover itself back to the highs in 2007 till March of 2013. So keep that in mind. It can be a very rocky road, and it can be a very slow road to recovery. And guys, I just wanted this video to kind of serve as a history lesson, kind of let you know that there is plenty more videos to come, and how I plan to help each and every one of you kind of plan for a recession. And the next video is going to be very critical to your portfolio management, as all the videos are. And I've got a lot of material coming, guys. Anyways, that's all I got for this video, guys. Go down to the comment section and tell me what exactly is on your mind about all this. How are you making adjustments in your portfolio? Thank you so much for watching as always, and have a great day.